The market close at the level, because this is a ranging market, we can expect at least one weak bullish candle, or here also at least one weak bearish candle, and then the market may break the levels. Hello everybody, welcome to this class. Today we want to talk about the patterns, the most common patterns. It is the engulfing patterns. Okay, it is the engulfing patterns. So we have, okay, let me draw here. We have the bullish engulfing pattern. This pattern is like this. This is called bullish engulfing. And also we have the bearish engulfing pattern. So it is like this. Okay, so this is the bullish engulfing and this is the bearish engulfing. But sometimes you may see in the market this pattern don't work after this bullish candle. It means the buyers are stronger than the sellers and the market want to go up. And here this means the sellers are now stronger than the buyers and the market want to go down. But sometimes you see here instant the market go down, it again go up and made a bullish candle. Why? Because these are the forex patterns. These patterns work in the forex mostly. The forex wait for a new high after this candle. After this pattern they wait for a confirmation, and again when they saw a candle with a new high here, they will enter and they will take profit in the next resistance level. Okay, so that's why these patterns sometimes don't work, because these are the forex pattern. And you can see here there is an example at this area in the market. You can see here this is the bearish engulfing, but after this candle we can see a buyer's entry. Here you can see a bullish engulfing, and let's check what is the next candle. You can see a seller's candle again. So sometimes engulfing will work and sometimes you can see engulfing will not work, because this is the binary option and we just predict 1 minute candle, one candle. But in the forex you can predict 1 hour, 1 day, or like this. But it is binary option, so you can see here sometimes engulfing will not work. But we can understand when the engulfing will not work. When you are seeing a momentum, mostly the engulfing will not work. You can see here a momentum. So at these situations the engulfing will not work. You can expect only a bullish candle after this candle. Okay, so engulfing in the bullish momentum will not work. And also if you see a bearish momentum and you see a bullish engulfing, you can expect again another bearish candle here. So when you saw a bearish momentum, the engulfing mostly will not work. But the mean of the engulfing is mostly the like here the bearish engulfing show you the sellers now are interested and the sellers wants to continue. The bullish engulfing show you the buyers now are stronger and they will continue. So the mean of the engulfing is here, but sometimes it not work because these are the forex pattern and we can't trust properly. We cannot rely only on the engulfing patterns, so you cannot only trade with the engulfing. When you say engulfing, you cannot trade directly. Okay, so another pattern we are talking about, it is morning star and evening star. I'm showing you this pattern just to recognize this pattern in the market. So as you know, this is a, okay, let me drag again. This is a morning star pattern. You can see here a spinning top or a doji candle, and again buyers. So this is the morning star pattern, and this is the evening star pattern. So in the binary, after this pattern, after morning star and evening star pattern, we can mostly expect a retracement candle. What is the retracement? You can see here it is a bullish candle, so we can expect another bearish candle here after this pattern. So most of the time we can see a retracement candle after this pattern, and here also after this bearish candle we can expect a bullish candle. And again, market, if this candle be very weak candle, again market will continue to go down, or if this candle be a strong candle, the market may go up again. So we can expect a retracement after this pattern in the market. So these two patterns, engulfing and morning star and evening star, are a forex pattern. We cannot rely only on this pattern in the market. I just show you to know about this pattern, but here we can rely in some pattern market make mostly. The first one we want to talk, if suppose it is a support level, the first pattern we want to talk, it is double bottom pattern. So the double bottom pattern, it is showing us, okay, a bearish candle hit the level, and again you can see a buyer's candle. Again the market hit the level, and again you are seeing a bullish candle. So this is the double bottom pattern, and after this bullish candle, this strong bullish candle, we can expect another bullish candle here. The market will go up here. Let me show you one example. Okay, as you can see here, we have the double bottom pattern. This is our support level. Okay, let me turn it to red. Okay, this is our support level. You can see here market goes down, hit the support level, goes up. Again it go down. Again we are seeing a bullish candle, a strong and good bullish candle. The next sellers are here. So also there is a gap. This is called gap. So we can place a higher option because this is the double bottom pattern. After this candle, the market will make another bullish candle here. So you can use this pattern. Also we have a double top pattern. It is, okay, let me find the double top pattern here if possible. Okay, here, this is the double top pattern. You can see at this area market hit our support level, a sellers. Again it tried, again we are seeing a strong seller. So the next candle will go down because this is the double top pattern or M pattern, and double bottom pattern or W pattern. So these are the good patterns. You can use this pattern in this market. So these are good patterns. So we have the double top pattern, a M, and we have a double bottom pattern, or W. So these are good pattern. And also we have a pattern that market will create in the uptrend. This is the uptrend pattern. In uptrend market moving like this. So as you can see here, we have a low and this one called high. Okay, this is higher than this low, right? This is higher. You can see this is the low and this is higher than this low. So it's called high low. And here you can see it is a new high. It is higher than this high. So it called higher high. So this is most common question. What is the high low, higher high? It is this. Okay. This is the high and this is the low. This is higher than this low, so it's called high low. And this is higher than this high, so it is higher high. You can see this high, it is higher than this high. So it's called higher high, and this is the high low. And you can see the market in the uptrend make higher high. Okay, when the market didn't make a higher high, it means the market is changing its direction. You can see if the market move like this, you can see here it didn't make, it is the last higher high, and now the market didn't make a higher high. Okay, if it won't continue to go up, it must move like this again. But now you can see it changed its direction. It is again, it is low, and you can see it is making a lower low, and it is going like this. The market is making lower low. So in the uptrend market make higher high and move like this. In the uptrend market move like this, and in downtrend market make lower low and it move like this. So this is the downtrend and this is the uptrend pattern. It will help you in the market. It will help you in the market to trade. I will show you some example. Okay, you can see here in this market it start to go up and it is making or higher high, right? The market making the higher high here and here. So what is telling us? It is telling us the market will not respect the previous level, previous resistance. The market will not respect the previous resistance. So it is showing us the actual level. The actual level is here. The market is moving like this. So it is showing us the actual level. It is here. The actual level, it's not here. Okay. So it is showing us the market is reversing in the middle, so it can easily break the previous resistance. You can see it is moving like this. You can see it is moving like this pattern. In this pattern, you can see in this pattern, as you see, the market don't respect the previous resistance. You can see it break the level. Again, it break the level. So in this pattern help you to understand in like this uptrend, the market don't respect the previous resistance. Okay, and you can see here we have a resistance here. Okay, you can see here we have a resistance level here, right? And you can see the market didn't respect this resistance and it break the level. Here we have also a resistance, and you can see the market here didn't respect the level and it break the level because the market is going up and it following this pattern. It following this pattern. In this pattern, the market didn't respect the previous resistance and it break the level because of this pattern. And also in downtrend, we have this pattern. In downtrend, we have this pattern. So you can see the market don't respect the previous support. Here you can see it's break. Even the market, you can see close at the level, but the actual support level is here like this, a trend line. So you can see even the market close at the level, it break the level because market is moving like this. Market is moving like this, so it don't respect the previous support level. You can see here also it didn't respect the previous support level, it's break the level. So when the market is moving on this pattern, it is more possibility to break the previous support level. It is not 100 because in the binary there is no 100% thing. So you can see here it will not respect the previous support level because the market is moving in a trend, so the level will be the trend line. It's moving in this trend line. Okay, so these movements will help you. Let me repeat again. The double top pattern, the double bottom pattern, the uptrend, and the downtrend. And also we have another pattern. It's called head and shoulder pattern. It is like this. So this is the head and shoulder pattern. This is the head and these are the shoulders. So let me show you this pattern in the candle. Okay, let me find. Okay, this one, it is a head and shoulder pattern. You can see this is the first shoulder, this is the head, and again market close here. So we can expect a head and shoulder pattern, and we can expect a seller's entry again. So you can see the sellers again enter and the market goes down. So this is the head and shoulder pattern, and it is also a good pattern. You can find some example in the market like this. So these are the pattern you can use in the market, and this pattern will help you to know how the market will move, and when the market come to this level you don't place a higher option. And you can see here there is a double bottom pattern also. Here you can see it right, buyers enter, again buyers enter. So here you can see another bullish candle. So this pattern will happen in the market, and this pattern will help you to know the market movement, how the market is moving. And also we talk about the higher high and lower low in the market. So let me show you some example now. Okay, here I want to show you something. The market is moving in the up direction, right? So we can expect this movement in the market. But here you can make a strategy. It can be a good strategy, and you can use this. when the market reverse in the middle of the trend. Okay, it is the uptrend, right? So the market moving like this. So when the market reverse in the middle of this trend, you can see this is an uptrend and it reverse in the middle of the trend. Here you can see a clear example. It reverse in the middle of the trend here. You can see this is an uptrend. It is in the middle of the trend and it reverse here. So when the market reverse in the middle of the trend, wait for the next candle. Okay, and when the next candle be a bullish candle with a new high, when the next candle also be a bullish candle with a new high, it is the confirmation that the next candle will also must be a bullish candle. And you can see I use this point here in this trade and I get ITM. So this strategy will mostly work this point in the market when the market reverse in the middle of the trend. You can see this is middle of the trend. When the market reverse in the middle of the trend and you are seeing this candle, wait for another bullish candle with a new high, another bullish candle with a new high, and place your trade a higher option. The market will made another bullish candle here. And also in downtrend, because it is moving like this, also in downtrend, if the market reverse in the middle of the trend, wait for another bearish candle with new low and it will confirm that the sellers want to continue and you can go with the sellers. But don't forget, always check the levels in the left. If there is any level you cannot trust, the market may reverse. You can see here in the left there is no level, the next are here. So it is good and it is safe to place your trade. And you can see here I place my trade and it's a win. So with seeing this movement, you can know how the market is moved and you can get some opportunity to trade like this, because the market is moving like this. That's why you can place your trade easily, and it reverse in the middle of the trend and we have a confirmation, so we can go with buyers and it's a win. As you can see, it's a win. So always remember this point also. And also I want to tell you one points on another points. The two rejection in the market are important. When you are seeing two rejection in the market, two candle like this with two rejection and there is no support level, you can go with the sellers in the third candle. Mostly it will work here. You can see it worked. But when you saw three rejection, you cannot again go with sellers, because the three rejection shows us the buyers are interested in the market and they may enter in the market anytime. At the anytime they may enter after this candle easily. Okay, so the two rejection are also important in the market, so remember this point also. The two rejection are important in the market. Okay, now let's talk about consolidation area. I talked about consolidation area in the previous class also, but I wanna repeat it again. You can see this is the consolidation area. The market don't have any movement and it's blocked in the box. So what we can do in the consolidation area, the trading in the consolidation area is very risky. So you must just wait the market break the consolidation area, because it may break every time and it may stay in the consolidation area for 20 minutes or more. So you must wait for a breakout, and you can see a breakout, so you can trade. Breakout in any direction. Breakout in up, you can go with the trend again, and breakout in down. So you must wait for a breakout. Okay, and now let me show you what is the ranging market also. Okay, this is the example of the ranging market. You can see the market is moving in this range. The trendy market, I show you the trendy market move like this, right? A trendy market, this is an uptrend or a downtrend. A trendy market is this, it is moving like this. So here market was in uptrend until to this level, the market is uptrend, and on this area you can see the market only move in these two lines. So this is called the ranging market. This is the ranging market. And for a newbies, for people who don't have much experience, I recommend to only trade on these levels. This low level or this high level. It is good, it is safe when the market close at the level, because this is a ranging market. We can expect at least 1 week bullish candle, or here also at least 1 week bearish candle, and then the market may break the levels. Okay, so it is good to trade at these levels. It will mostly work when the market close at the level, not with a gap. So when the market close at the level, you can place your trade, not like this. You can see here it is a big gap, so we cannot trust here. So when the market close at this low level or high level, it will work. And let me show you an example. Okay, here you can see this is a ranging market and the market is at this level, and you can be more sure, you can get more confirmation in the market. And you can see here also I use this trend line to be more sure. You can see there is another entry points, so I'm now sure from this level the market will go up. So you can see here there is a rejection. The rejection at the level shows us the interest of the buyers. This rejection shows us some buyers are interested at this area, so always remember these points. You can see a rejection, this showing us the buyers are interested. You can see this one. You can see in the live candle we are seeing so fluctuation here, and now we are seeing a rejection. It is showing us the buyers are interested and the buyers are active here, so we can go with buyers. And you can see I placed here my trade. You can see here the buyers are here, and if you here the market will go up for sure. But if you want be more sure, wait to market hit this week. You can see the week start here. So if you want more sure, you can place your trade here at this area. This is called marginal safety, and it will be good for your trades. So always try to trade like this. Here you can see I placed with marginal safety here for more sure, and you can see the market will reverse at least for 1 minute. When the market close at the level, it will be a bullish candle, and you can see it is a bullish candle. You can see here it is a bullish candle. Okay, so it will work. Here I wanted to place my trade a lower option because the previous class points, it is a green hammer candle in the middle of the trend, because the sellers are here, the buyers are here. So this is the resistance, this is the support, and it is in the middle of the trend. You can be sure because seeing this new low. Why? Because you can see the buyers are here, the next buyers, and the next buyers in the market enter from this level. The buyers change their entry point from here to here. First time you can see a rejection here, the buyers was here, and now you can see a new low. So now the buyers change their entry point from here to here. So now the buyers are here or the buyers are here, right? So the new low will help you to know this. So the new low showing us this one, this point. So you can see there is a new low here at the market, and the next buyers are here. This is our continuation sign candle, so we can go with sellers, but here I didn't get any good entry point. Don't jump in the market, wait for a good entry point, you may lose because of bad entries. You can see I didn't place any trade here because I don't get any good entry point here. Okay, I'm showing you this because this have some good points here, that's why I'm showing you this. Okay, here as you can see, here you can see at this market I place here a higher option here. Why? Because you can see a very strong support level here. At this area you can see this support level hold the market for a long time, so it is a strong level. It is one reason I wanna place a higher option here. The next reason, this is a hammer candle. This is another reason, it is a reversal sign. The next one, you are seeing a long wick at the support level. This is showing us a very strong rejection, very strong force from the buyers. It is another reason. And the next reason is this. You can see this candle open with a gap. You can see this candle close here and this candle open here. There is a gap here, a space. Okay, this gap is sign of reversal. You cannot rely only on this point when everywhere you saw a gap go for a reversal. No, it is wrong. You can see here I have so many reasons and I have also this reason. Okay, after this so many reasons I have this reason also. So this gap is sign of reversal. So remember this one. When you saw a candle like this and again with some gap, the next candle open at a level, this gap is sign of reversal. This gap, okay, this gap sign of reversal. Now you can see this condition here. Here we have a gap and we have at the strong support level, so I place here a higher option, but because of my internet it didn't show me. I don't know what happened here, but you can see here, if you check here my account balance, the trade placed. Okay, let me show you. You can see I reopen and you can see it placed here and you can see it is a bullish candle. So I win this trade because this whole area, you can see here also we have a round number also. This whole area is a very strong support level. You can see it hold the market for a long time. We have a gap, it is a sign of reversal. We have a reversal candle. We have a strong rejection. So we have so many reasons. That's why I placed here. Okay, here that the thing I talk about this with you. The pattern will help you to know the market movement. You can see this pattern is in the market. So many people seeing the market close at this support area. Also they are getting a confirmation here. You can see this wick. This is a confirmation. You don't need always check for a 5-second confirmation. A rejection will be a confirmation also, but it is more good. So always check the 5-second confirmation in the 5-second. Okay, but when you get experience, you can identify, you can recognize the 5-second confirmation with rejection. Okay, so we have a 5-second confirmation also. There is a level. People place the higher option, they will lose and the candle will close as a bearish candle and they think the market is different in real account, but it is not different. You don't know some small points in the market. You don't watch this movement in the market. So I place here a trend line. You can see I didn't draw this horizontal line for this market. I draw a trend line because I know it is going down. You can see here the market never respect the previous level. You can see here it break the level. Okay, so also if you want to see the future, look at the past. If you saw the past, you can see the market didn't respect the previous level and it is breaking the levels. So that's why I didn't trust this level, and I was thinking for a lower option, but I missed this trend because of time. I missed this trade. But you can see, I will show you. You can see this candle close as a bearish candle, and you place your trade and you lose, and you think the real account is different, but it is wrong. Okay, here also you can see I was thinking about lower option because there is a level, and you can see here a rejection. So I placed my trade, but because of bad market, you can see the 5-second shows us. The 5-second also shows us the consolidation area. So it is a bad market. That's why I won this trade because of my entry point and because of bad market, I think, or I think because of bad market. You can see so many rejection here. So because of bad market, I think it closed as a bullish candle, but because of my entry point, I won this trend. That's why I told you always place your trade with some margin of safety. It will be good. And you can see I won this trade because of my entry point. So this is about pattern, about higher high and lower low. And also I show you some points. If the market reverse in the middle of the trend, you know now what you must do. If you saw 2 rejections, now you know it is important. If you saw 3 rejection, now you know. So we talk about these points, but now I want to show you how to trade at the news time. So for checking the news time, you can go here, market analysis, and here forex calendar, but my internet problem. Okay, wait. Okay, let me show you again. So for knowing where the news will happen, you can go to the market analysis. You can open this and go to the forex calendar. Here you can see this option here, the forex calendar, and it will show you the news will happen in the market. You can see here at the 7 p.m. we have a news. We open this and you can see here, I will show you, we have a news in the USD pair because it is repeating here. You can see the USD pair is repeating at these areas. Okay, so we have a news on the USD. But what is the news? I always recommend you to trade on the news that forecast and previous. These are showing, these are visible for you. Sometimes sometimes these are equal, so it's not good. I recommend you to trade on this situation when you are seeing the forecast showing red, showing the price will fall and the price will decrease, or when the forecast is green and showing us the price will go up. So it is good when these two are equal, leave it and go for another news. Okay, so it is more good, it is more trustable because you know where the price want to go. Okay, here you can see it is red, it is red, show us the price will decrease in USD pair. Okay, in USD pair. So USD, the price of USD will decrease, right? So the okay, let me show you here. So the USD will decrease, so the USD JPY will decrease, the USD CHF, USD RUB, all the pairs that the measure, the first pair, the measure is USD will decrease. Okay, but the pairs that the USD is the in the second place, like Euro USD, you can see USD is in the second of the place, so USD go down but Euro will go up, so the price in the Euro USD will go up here, in the GBP USD will go up, in the NZD USD will go up. So when the USD is going down, the USD JPY will go down, but the Euro USD will go up. Why? Because USD will go down. Here in the USD JPY, the USD is the measure pair, the measure currency, so the overall the price will go down. And here the USD is in the second one, the Euro is the measure currency, so the price will go up. So okay, this is the reason, and always trade on those one, the forecast is visible for you. Okay, you can see here, don't trade here, don't trade on this news, you don't have any forecast here. Here you can see you don't have any forecast here, so don't trade here, trade here. You know the price will decrease in the USD pair because the USD is repeating here, and also here it is a USD. Okay, and also another point, sometimes you have here you have two, sometimes you have 3, 4 in the 7 p.m. news, you have 4 news in the 7 p.m. so you must check the another ones also. You can see here I come to this and check, and here I check here. Okay, here you can see also we have USD and news in the USD, and also the price will decrease, so there is no important, it is okay. But sometimes you have, sometimes here you have a news in the Euro, and it's showing us the price will increase or decrease, so it will affect the market also. So don't open the Euro USD, okay, open another one if you want trade for USD in the news of USD. Okay, try open the USD JPY, NZD USD, GBP USD. Okay, so if you have if you want trade in the USD news and you open another news at the same time at the 7 p.m. and you are seeing in Euro also we have news, so avoid the Euro USD pair, because the news on the Euro will affect the news on the USD, and the market, we don't know, it may go up and it may go down. So when you have two news, avoid the one pair that you have news and only trade on the one currency. Okay, so it is the point, and it is important when you have news in the USD and also in Euro. If you want trade on the USD news, don't open the Euro USD, because the Euro news will affect also the USD news. So it is showing us the USD will go down. Here you are expect, because it is the second price, the whole the price will go up, but the euro news may make the market to go down and you will lose. Okay, I hope you understand this point. So you can check the news, and now I want to show you how to trade at the news time. Okay, on this video I want to show you how to trade at the news time. You can see I open the market analysis and forex calendar here, and I check for the news, and the news is in the 5 p.m. I check the forecast, and it is showing us the here also it is news about USD. It is showing us the price in the USD will go up, it will increase because it is green, so it will increase. It is more than the previous. You can see here it is more than the previous, so the price will go up, and we can trade here. Okay, you can see here. So here you can see I placed 4 charts. For trading news, at least you must open 2 charts, and you can also open 4 charts. Okay, you can see in these 2 above chart the USD is in the second place. The USD is in the second place, and in these 2 below chart you can see the USD is the major currency. It is in the first place. We are seeing the USD price will go up, right? So the major price will go up. In this 2 below chart the price will go up, and in this 2 above chart, because it is in the second place, the price will go down. Okay, here we must open the 5-second chart. You can see here it is 5-second chart, and we must wait for a confirmation when we reach the news. Okay, you can see here the news was in the 5 p.m. and you can see here we still have some time, so we will wait for exact 5 p.m. Okay, you can see now it is exactly at it is exactly the news time. Okay, now we start. What we want to do, okay, we know in this 2 below chart the price will go up because we saw in the news the forecast was green, so the USD, the major USD will go up. So here we must wait for a bullish confirmation, and in these 2 above, because the USD is the second place, the price will be go down, and we are waiting for a bearish confirmation. So now it's a start because it is exactly at the news time. It is 5 p.m. Okay, now let's wait. I'm waiting for a confirmation, and you can see okay, you can see here I got my confirmation here, so I place my trade. I got my confirmation here, so I place my trade. Here it is not still a confirmation, but I place my trade directly here, but you always wait for a confirmation. But here you can see I'm waiting for a confirmation. Here I place my trade directly, but here I'm waiting for a confirmation, for a bearish confirmation. Still there is no confirmation. Still there is no, and now you can see I got my confirmation. So this is the way you can trade at the news. You can see here I got my confirmation. Because we know the USD, the pairs that USD is in the first place will go up because we see in the news, and the price USD is in the second one, the price will go down. And here I place directly I didn't get any confirmation here, but here you can see I got my confirmation. So let's wait for the result, and you can see it's a win. Okay, let me show you again. And you can see you will win at least 3 of these trades. 3. So always open the 3 chart or 2 chart that the price will go up or down, and always open a opposite chart that the price will go down when these are going up. Okay, it will help you to be more sure about your trades, and it will be good. You can open one chart, one opposite chart, or like me 2 chart. It is your wish, and you can trade like this at the news time. So in the news time also, now we can trade. So this was for today class, and please go and practice all these points, and don't just watch this course. You must go and practice. Okay, you can learn just by watching this. You must go and practice these points to always remember this point while you are trading. Okay, so this was for today class, and have a nice day.